everyone, and welcome to today's panel entitled Central Bank Digital Currencies, or CBDCs, Achieving an Open, Safe, and Competitive Monetary System that Supports Innovation. I am Bob Trojan, and I'm delighted to be your moderator today with an awesome panel that you see on your screen. First of all, greetings from New York. Before we begin, a couple of housekeeping items. Please insert your questions in the Q&A section of your screen and utilize the chat function for any comments you may have. So let's dive in. There are over 80 different central bank digital currency projects underway globally as part of one way to support the development of digital economies. Now, digital economies are really important because they can foster greater financial inclusion, better interoperability among economies, transparency to help combat illicit activity and terrorism, and stronger foundations to withstand catastrophic events like COVID-19 pandemic. So very, very important. So as I mentioned, we have an incredible panel today, and we'll hear from each of them briefly. And then we'll end the session with questions. So first is Jesse McWaters, who will share with us today an overview of the motivations, challenges, and architectural choices surrounding global central bankers' exploration of retail CBDCs. So Jesse leads MasterCard's global regulatory advocacy function, where he is responsible for directing the company's public sector engagement on a wide range of emerging regulatory and policy issues. Jesse is particularly passionate about driving public-private collaboration at frontier of financial innovation, including crypto assets, central bank digital currencies, AI, 5G, and open banking. Jesse, I'm delighted to hand the floor over to you.
Thanks so much, Bob. I'm absolutely delighted to be here. It's a really exciting event, and really excited to be able to share a few of our insights at MasterCard on this really interesting space of central bank digital currencies. So I'm just going to share my screen here, and thought that I would take us through a discussion of really trying to introduce this topic and some of the really interesting things that we're seeing in this space. I think the first thing, and apologies for many of you if this strikes us as particularly rudimentary, but it's just to really understand how central bank digital currencies are different. Because in some economies, obviously, we continue to be predominantly cash-based, but in many economies, you might kind of look at the payment system, and whether it's characterized by mobile money, card networks, pay by account networks, you say, well, I already have money, it's already digital. What's different about a central bank digital currency? What I've tried to do in this diagram that you see in front of you is to lay out kind of some of the distinct characteristics of CBDC. That today we already have liabilities on the central bank in the form of cash, coins, and the like. And we already have lots of forms of money that economists call commercial bank money. That's a liability on commercial banks that exist in a wide variety of digital formats. But in most economies, right now, the only way to access a digital central bank liability is to be a bank yourself. And so when central banks start to talk about CBDCs, what they're really saying is we want to roll out a payment network of our own, and one where the value on that payment network won't be a liability of a commercial bank or a private e-money issuer. Instead, it's going to be a direct liability of the central bank. And this is an idea that, as Bob alluded to, has become enormously popular over the last 2 to 3 years. I mean, we've been talking about central bank digital currencies for a while now. The Bank of England put out a paper sort of musing about them in 2015. But for the longest time, they were really kind of a conceptual idea, the sort of thing that economists and central bankers talked about, but nobody was really actively considering building. And then in 2019, all of that changed. And this is maybe a little bit of conjecture, but I think there's broad consensus that what really triggered this was the very ambitious plans of Libra, organized by Facebook, to sort of think about creating a global stablecoin. And there was this reaction by central bankers. They say, wow, the world is moving pretty fast. We should be thinking about what role we want to play in the future of payments within our countries. And so we see now a world in which 80-90% of major central banks around the world are considering the exploration of CBDCs. And we've seen in some countries that have been working on this for quite some time, like China and Sweden, that there are very mature pilots. And in a very small number of countries, like the Bahamas, we actually have live operating CBDCs today. So it's a space that's moving extraordinarily quickly. But I think that one of the most important things to understand about CBDC is that just because central banks have started their exploration at the same time, doesn't mean that the motivations or the policy objectives of every country's CBDC is the same. So I always think it's worthwhile to take a minute or two to kind of think about what some of the different motivations that different central banks have around this space. I think that one of the motivations that we see as a high-level category is a desire to preserve the central bank's role. And we see in this kind of the ghost of Libra, if you will, central banks saying, oh, we're a little bit concerned about these ideas. We're a little bit concerned about permissionless crypto. How do we make sure that central banks and central bank money remain at the center of the economy? We do that potentially by issuing a CBDC. And we see this, some central banks saying, well, we want to issue a CBDC because we want to compete with private money like Bitcoin, these kind of new money concepts. And we see others, like Sweden, for example, saying, well, cash has totally fallen out of use in our world, where only 1 or 2% of payments are being done in Sweden right now in cash. We want to preserve access to a public sector form of money, central bank liability. And if people don't want the old way of our old product for that, cash, well, we'll come up with a new product in the form of the digital. I think this first category is really important because central banks are unique in that they are the only ones that can provide this. The second, new payment functionality. Can we figure out a way of driving financial inclusion? Can we provide more streamlined government disbursements? Can we create programmable or offline payments? Really exciting things, not the exclusive purview of the central bank. Lots of different players are experimenting with these capabilities. But if you're going to build a new payment system, you want it to be as exciting and shiny as possible to hit as many of those payment needs as you can. And then we also see people looking to achieve a variety of domestic goals, bolstering payments system resilience, increasing what's sometimes called sovereignty over payment systems. And in some places, like in Cambodia, actually looking to relaunch the domestic currency in an environment where effectively they've been dollarized by the US dollar due to previous financial challenges. So a lot of different motivations, but a similar set of ultimately manageable challenges underlying this. We hear a lot of economists talking about potential challenges to monetary policy, potential disruptions to monetary stability. There's a need to navigate questions of privacy and security, and you need to make sure that building a CBDC at your house doesn't negatively impact your neighbor, something economists call spillovers. And so when we think about this at MasterCard, we ultimately think about looking at the central bank digital currency as part of a much broader payment toolbox. What's the right role in a given economy for a CBDC to play? How do we make sure that the private sector plays an important role in bringing that CBDC to the fore, driving competition and innovation around a CBDC platform? How do we make sure the CBDC is interoperable with other payment systems? And how do we make sure that consumer interests are protected? And I think if we keep those principles at the center of what we're trying to do, we're ultimately going to be sort of much more successful. Because there are a lot of important questions to be asked about a CBDC. CBDCs aren't a one-size-fits-all proposition. There are a lot of really important architectural considerations that hopefully we can talk about a little bit more in the discussion portion of this session, like whether or not it should be a account or a token, whether it should be an hybrid or an intermediated architecture, as the BIS has called it, how you navigate issues of privacy and compliance, and whether or not it should pay interest. And so I'll just wrap up my presentation here with a bit of a pitch, which is to say that at MasterCard, we're really excited as a multi-rail payment company to be playing a constructive role in working with a large number of central banks around the world, helping them think through, test, design, and ultimately in some cases actually operate their central bank digital currencies. We've developed a test and learn sandbox for this and really excited to work with central banks around the world on that. And we're also working with folks like the Central Bank of the Bahamas to actually operationalize some aspects of their CBDC, particularly when it comes to being able to use that CBDC outside of the country, providing some of the cross-border functionality around it. And happy to talk about that a little bit more in the discussion portion. I know I'm a minute over, Bob, so I'll wrap up here and hand it off to our next presenter. But this is a really exciting topic and one that I know we're going to have a great discussion about.
Thanks, Jesse. Hey, what a great kickoff to this panel session. And again, so many different things to consider, like future interoperability and cross-border payments, not only within a specific economy. So lots for the end. So next, I'd like to introduce Karan Jain. Karan is the CEO of Naya One, a digital sandbox and a fintech as a service provider. Karan is highly regarded as a finance technologist, bringing a unique perspective and real-life learning from both financial institutions and the startup trenches. With an in-depth understanding of the finance and tech ecosystem, Karan is an advisor to all sorts of folks like trade associations, regulatory working groups, and think tanks in a whole bunch of different domains. So Karan, over to you.
Okay. Thanks, Bob. Thanks for the intro. Morning, good afternoon, and evening, everybody, because I know we've got global viewers. It's a pleasure to be here. And today I want to maybe extend a little bit on what Jesse's just shared and bring to life what a CBDC innovation looks like when working with the likes of central banks, commercial banks, and regulators. So I'm going to keep it pretty simple and talk about the new ways of working, right? So it's no surprise that we're talking about CBDCs, and I'm not going to repeat some of the things Jesse said. However, we also need to talk about how we innovate, not necessarily how we're going to get to central bank digital currencies, but how we're actually going to innovate. What's the new ways of working? Because when was the last time, I don't know anyone who rolled out a currency, right? So we're all in this kind of new form, trying to roll out digital currency. So we have to think about how we work. And what do I mean by that is when we're rolling out a change, and especially when the change is so big, we have to go back to the first principles. We have to go back to the mindset. And, Jesse touched on mindsets, and some of the other panelists are also going to touch on use cases. But if you think about any big impact, any big change that's going to be rolled out, you can boil that down to three basic things, which, basic but complex, is the people. And who are the people that are involved, the stakeholders, when we're considering central bank digital currencies? What are some of the processes, the policy, the framework, and the governance around it? Not only the governance to roll it out, but also the governance to maintain. And what about the technology, which is not just a single rabbit hole, but multiple rabbit holes? So let me just share. So what I'm going to do with you today is I'm going to share with you how we worked with a number of central banks, regulators, and commercial banks, and working with, and what are some of the lessons we learned, and what are some of the things we're seeing. So just quickly to set the context. So as Bob mentioned, Naya One does two things. We're a digital sandbox company, and as well as fintech as a service. From a digital sandbox perspective, how we work with the CBDC is to establish a marketplace for particular clients and bring in number of tech that is required. And by number of tech, I don't just mean the core ledger, but also what are some of the wallets, what are some of the API stacks, et cetera, that are required in order to make the whole ecosystem work. Then from a data perspective, including data sets, not just transaction data sets, but what is a profile of different SMEs that look like they're going to be working in this. Then we have multiple sandboxes. And the reason I say multiple sandboxes here is when I go through some of the use cases, we were able to spin out a sandbox per use case and allocate a working group or a governance unit that would take that forward. And then lastly, we have the orchestration layer that brings all these things together in order to allow a working group that's focused on financial inclusion to take that forward. Now, I'll give you the key point. The key point here is you're able to bring all the stakeholders and all the tools into one place to start innovating digitally in a secure place without the real data, right? That's the key point of doing this. So if we start with some of the design principles of the work we were doing, for this particular case, it was stability, coexistence, and efficiency. And if you think about some of the things that you'll hear today and throughout the conference, they boil down to a good 80-90% boil down to these three things. If we look at some of the CBDC use cases that we were addressing, it was the inclusion, it was the future of payments, it was digital innovation, and that also touches on some of the interoperability elements. I think a big one was around policy testing. So be able to set up policy frameworks digitally and run through governance frameworks and technologies and data through that in the sandbox to see how the policy and frameworks suitability and be able to adjust them as they go. Interoperability I spoke about, and the programmability from an actual technology perspective. Now, if I look at, just quickly touching on people perspective, I'm looking at people from different types of money, right? So, and that helps us kind of see who are the different stakeholders and they overlap, but this also helped us kind of narrow down or rather expand and not leave any stakeholders off the list. And it also helped us marry them to the use cases that I mentioned earlier. Now, if I look at CBDCs technology, I didn't have a page big enough to put all the vendors on here. But you know, one of the common things we hear from our clients and perspectives is we just don't know who to go with. As Bob mentioned, there's 80 plus central banks that are looking at CBDC. There's just as many, or if not more, commercial banks looking at the impact of CBDCs as well as stablecoins. And there's, you know, the list of vendors is constantly growing. So it's about how do you narrow that down? And I think it comes down to your design principles and your list of stakeholders and your objectives and having a place where you can bring them. Now, from an interoperability perspective, you know, I think the biggest one is CBDC cannot operate in a silo. It has to operate within the economy between different stakeholders, but also cross-border between number of people. And that comes with all sorts of, you know, standardization within the, you know, economy, within the continent, within the, you know, legal frameworks. So I think as an industry, we're only just started scratching the surface on this thing. And then there's plenty more questions to be answered on the interoperability. So that's an area where we spend a lot of time discussing. And one thing that not always gets mentioned is when you're looking at interoperability, it's not just about interoperability from core ledger to, you know, commercial bank tech to, you know, end user consumer wallets, digital wallets, but it's you know, central bank to central bank. But again, my key point is it's not just that it can interoperate, but can it interoperate effectively and efficiently, and can it handle the performance, right? And then I think that's a very important point. And you know, my friends would say that that's okay, that's day two problem. But anyone who's you know, had the privilege of rolling out complex systems would go, that's a day two problem, but you got to have it on your radar. I see Jesse laughing his head off. So from a data perspective, I know it kind of rolls up within the tech, people, process tech in the tech part, but data on its own is pretty important. And within this is the privacy, the access and management, and with, you know, with most countries having customer digital rights. It's an important element to be factored in here, and the digital ID solutions. And what's, you know, I'll mention that the interoperability between those regulations as well as those technologies is an important piece. Now, architecture, I think we can do a whole session on its own, but I think the important point I want to mention here is this is another within tech. If I break tech down, it's the actual technology, it's the data, it's the architecture blueprint. And the reason I put that here is when you come up with the design principles day one, or what you want to do, they have to go along with the architectural blueprints. And again, you can build these out in day two, but you've got to have them on your radar. Again, just to wrap it and bring it back home, we were able to load up the solution marketplace with all sorts of different technology. So core ledger, the commercial bank tech and different nodes, and also different wallets, and actually run that end to end. Then able to interact with another type of core ledger using different type of data sets and having a sandbox per use case. And having that visibility both by the central bank and the regulator and having it transparent across the different groups that were participating in this. Now, the last point, and I'm sure I'm up against almost time, is the thing. There were a lot of learnings, and this is still ongoing, and there's new ones spinning up. But the 5 things that I thought that made the most impact when we talk about CBDC innovation is having a common starting point, and that's and it kind of touches into the agreed design principles. And, it's one of those things that you can have a conversation about for next 3 months and next 6 months. But I think the important tip I would give is at 80-20, agree the design principles, what matters, and it touches on the motivation of why you're doing it, but not losing the foresight of what will come. Because otherwise it will be a half a solution and it's really hard to backtrack. The third important tip is considering interoperability from day one. 4th point is ability to test policy. No one's going to have the right policy or the framework from day one. Even if we think we are, as these things start to go live, there will be changes. You're better off testing the policy in the sandbox with the stakeholders against the technologies and the data sets, and having those things resolved rather go live and have those issues later. And testing for the technology constraints. So the important point there is don't just test the technology, but test it for the constraints, what's possible and what's not possible. And I think that's main. So thank you for your time. I hope that was of value.
Great. Hey, thank you, Karan. That was great. And so a lot of things to digest here. And one key thing that I took away was, CBDC is a big place. And, one big thing that we have to look at is a lot of this discussion today could be retail CBDC. So how do you get to individuals utilizing central bank digital currency? But also there's the whole wholesale kind of conversation of how do you do bank to bank or central bank to central bank? And the underlying technology, as we'll hear from our next speaker, things like blockchain we've talked about forever, and it's very ironic that when blockchain first came out, it was going to kill the banks and democratize credit and things. And now we may find the biggest irony, particularly in wholesale payments, is that if blockchain is used, that could be an incredible cost savings and efficiency for big banks to do wholesale payments, is to use blockchain. So who knew? I am now delighted to hand the floor over to our next awesome panelist. Josina Rodrigues is the first holder of a blockchain PhD in Portugal. Before beginning her thesis in 2016 as an economist, she has worked for over 20 years in the corporate world as a marketing and finance director and a consultant advisor for several enterprises in Latin America and Europe. Josina is currently a blockchain and digital transformation expert and a member of the United Gulf Industrial Consortia, trainer at Blockchain SVCS, consultant for Kiva Chain and Jubix, as well as a lecturer in the digital economy and an advisor for several different structures. Additionally, she is a member of the academic advisory body of INATBA, where she supports the MICA and the policy position on market in crypto assets. She will address today the concepts, perspectives, and challenges of CBDC. Josina, over to you.
Thank you, Bob. And after these amazing presentations, we have a lot to talk. So first of all, I want to thank RegTech Africa team and Cyril Blessing Hannah for inviting me to participate in this amazing event. Mainly after this moment that we can live a post-pandemic period. It's a pleasure to speak to you all today about CBDCs and how they can help in achieving an open, safe and competitive monetary system that supports innovation. And thanks, Karan and Jesse, for your brilliant insights. So as an overview, I will share in 3 main axes: concepts, perspective, and challenge. So we have a lot of information. This week at World Economic Forum was discussed CBDCs with the big eyes as a potential to reshape financial systems, and why and how, changing the landscape of payments in banking. So the concept's very, very fast. When Professor Gary Gensler was offered at MIT the course Blockchain and Money in 2018, during the period that I was preparing my thesis, we cannot imagine how central banks will react and evoke blockchain. Actually, 90% of central banks are studying CBDCs to implement. The present concept of CBDCs was inspired only by Bitcoin and similar blockchain-based cryptocurrencies, but differs completely from a virtual currency, and is a misunderstanding when we try to have that parallel. So most CBDCs implementations will likely not or need any sort of distributed ledger such as blockchain. But I would like to share that it was the base for smart contracts, of course, Bitcoin, as everybody knows, DeFi, NFTs, and now Metaverse. Everything can be playing together with CBDCs. So the benefits of blockchain we can import, as we can observe in this new solution. So very academically, we cannot say that present is the present, the future is the future, because we are between different scenarios, what's happening. For example, in Canada, it's completely different from here in Europe, and different completely from Brazil or United States. There are several benefits that we can share. Money laundering, there's a $1 million problem, we can say, could be easy to identify, better chances to financial inclusion. As we are in RegTech Africa, it's so important for this continent. So we have so many different projects that can be launched in this moment. So in this graphic, we can present that the process to obtain and deal the financial solutions includes a sequence of central bank, real money, bank's promise, services, and end user. As an economist, all the sense of money, value, and how can change. I know that's MasterCard is here. So, but the sense, the value of money and what it represents and what is trust, everything is changing, and in this moment, it's essential to talk about a political game. So, perspectives. It is, here we are, CBDCs versus cash. With the pandemic, it was very interesting that we can see that for example, in developed countries, it is declined using cash. And the rise of contactless payments. And in low-income countries, the sense, the perception of the value is different. So it's a growing importance mainly as a store of value. So everything needs to be addressed when we are talking about in our subject as a platform to be safe, open. It depends of for example, in China, it's my first time that I'm talking about China. It's another kind of reality. So although it remains to be seen which trends will be enduring beyond the pandemic, we know, but it's a sense to analyze which kind of value of money we have in this moment for global economy. And here also a historical perspective, the fact the world central banks have warmed to the idea to backing a digital currency. We cannot say this, but marks changed over past decade. But from 2020 to 2022, it was during the pandemic, as this week in the World Economic Forum, someone said we have 90% of central banks adopting, studying CBDCs. So it's another moment of industry, of global economy. And here, only 3 moments, only to share after Q&A. For me, the most important, we need public and private cooperation. It's so important, for example, for the next RegTech conference, invite someone from the government to be here, for example, from Nigeria or South Africa. We need a collaboration. Congress has introduced 50 digital asset bills impacting regulation. This is another subject so important, we don't have time. Law. What is law? The law is the code is the law. It's so important to know how you be regulated. And yes, we are talking about SWIFT, and this week it was a lot of questions after Davos. We know, everybody knows, everybody reads the news, and we are in the right moment to have a lot of strategic and political decisions. So the challenge I'm not sure if I'll have time just to share a glance. We need to addressing the connectivity challenge. It is the most important. We have a range of obstacles. If it does not be removed, it will be impossible to live together. CBDCs and the fiat currencies and all the stable coins, as we had the presentation from Jesse, and we know that it's a challenge. CBDCs are new forms, of course, of fiat currencies. We know this. Even though they have payment capabilities, we need to have regulations. Otherwise, it's a natural way. So the emergence of CBDCs raised many questions about how they will work, existing payment systems, and we cannot compare each country or each economic bloc with another one. We know technically, we know the team, but the adoption could be completely different. So, and the last one, because we have so many challenges, it is different types of money are using different payment systems today. We have here MasterCard. The same, it will be eventually true in CBDC. I know that I'm just a little bit academic, but we can have a lot of different types of CBDCs, and why not? So, and just to finish, as a financial inclusion, I believe that my colleague will talk about. I'm very keen to say that I'm an optimist to using CBDCs as a financial inclusion, even though can be very dangerous. Yes, effectively, because we need to control all the data privacy and to know if it will be only inclusive or will be regulatory, how you spend your money. So it's very, very important to know this. But the central bank will need to rely on partnerships, of course. It's a very interesting moment to have this partnership, private and public. And for example, Kenya, where mobile phones operate Safaricom. I'm so sorry to talking about names, but we have so very interesting examples with M-Pesa app, suggests that private operators can successfully deliver near universal payments. And just to finish, in this moment, we are not only technical, and you, Bob, you are doing also, you are a gamer you're a gamer player in this new ecosystem, intelligence, the ability to adapt to change. So it's a very important moment to understand what is happening. So here's my contact, and thank you for your attention. It was a truly honor to talk with you.
Hey, thanks, Josina. That was awesome. Lots of concepts in there. As you mentioned, we could spend 7 days talking about a lot of this. A couple of key points that I took was you mentioned a very important word, and that is trust. And that, building throughout all of these systems, we really need to ensure that there is trust within the whole ecosystem. Other thoughts that I heard were public-private partnership. Absolutely. We may talk about the private sector involvement here, but also the law. So the law is different between countries, within places, even within countries, and digital assets more broadly than just central bank digital currencies really are kind of new cats that people have to figure out. And we've heard the term that code is law. That happens to be false. And so I'm working on a project with the United Nations with a whole bunch of super smart lawyers that are much smarter than I am on trying to figure out how to put digital assets into the global legal systems. And, smart contracts are not smart nor contracts. So with that, let me turn it over to our final panelist today, Tunji Odumuboni. Has extensive professional experience delivering technology-enabled business transformation solutions for large financial services providers, financial services regulators, and fintech startups across Africa. He is the CEO of MTech, and before joining MTech, he was the leader in KPMG's emerging technology and digital transformation consulting business, working across Africa as a part of KPMG's project team. He led KPMG Nigeria in their fintech practice, and is currently executive director of MTech, overseeing the continuous pursuit of growth opportunities for the company across Africa. So Tunji today will cover CBDCs and how they might enable innovation in financial inclusion and possibly use mobile money as a case study. So Tunji, over to you.
All right. Great to be here. I'm very privileged to have gotten the invite to talk about CBDCs. Thank you, Cyril and the team. Thank you, Bob, for the awesome moderation. And I wanted to say a big thank you also to the earlier panelists, Jesse, Karan, and Josina. And obviously, thanking the audience for staying tuned. I think this is a great time to talk about this very hot topic. I would just say, it's a privilege to be doing the last round on this, because what that does is having you heard from a very insightful set of panelists. You agree with me that the context for my presentation is done. I thought it would be really useful to talk about what I think Karen called the common starting point. Every central bank looking to implement a CBDC needs to have this common starting point. And I think JC also referred to it as motivation. So what should motivate this, right? And the motivation, as I think Jason mentioned earlier, will differ from country to country, from region to region. And understanding what the motivation in the regulatory space, we tend to call that policy objectives, having that clarity and being able to design fit for purpose solution, to address those objectives, I think is key. And one of those motivations that we often talk about in Africa certainly is, I'm just looking at the state of financial inclusion, is how my CBDCs, address that issue of, we have so many adults that are not included in the financial system today. And I think it's clear, what sort of challenges and missed opportunities that you have with those kind of issues, and how might we truly do something new with CBDC? And I think, Jesse also talked about it, questions around, what is different? How does this change the game, particularly around CBDC? The way I look at it is, we need to talk about the what, but also have clarity on the how. So, and I'm hoping that at the end of this, you will be able to glean one or two things around the how, because it's still a bit esoteric for a number of people when it comes to how do we make CBDC drive financial inclusion. Transformative value or transformational value of CBDCs, I think a number of these points are already spoken about, what CBDC might do when it comes to some of these use cases. Certainly, it can make payment system more resilient. The resiliency issues that we see today with the number of legacy infrastructure around payments, you can look to CBDC addressing that. Economic development, if truly you can address, things like financial inclusion, you can link that up, powering different value chains and all of that. Remittance is a big thing in Africa, for example. Just looking at the inflows from the diaspora, the number of Africa living out of Africa. How my CBDC enable that? I had a presentation earlier and I showed, the enormous growth that we've seen over the last 2 years when it comes to peer-to-peer crypto transactions into Africa. And you see that as remittances because the ticket size of those transactions are quite low. So you can talk about multiple sort of motivations, but what I want to sort of dwell on today and just share a bit of perspectives with you, some of the thoughts we have at MTech when it comes to leveraging CBDC solutions in a market like Africa, and how can that and other developing and emerging market, how can that enable financial inclusion? So the way we look at CBDC, and I think this equation I have on the slide, we've had a number of panelists already speak about this, is an equation that speaks collaboration, right? Collaboration is a game. I think it was Karan that mentioned earlier that CBDCs cannot stand on their own, right? They can't. They certainly won't deliver any of those transformative value or transformational value that I spoke about in the previous slide. So you need collaboration to make that happen. So in the case of financial inclusion, what does that look like? What does collaboration look like? Today, you can talk about a lot of collaboration between central banks and commercial banks when it comes to enabling distribution of payments, right? But there are some real challenges that make that very difficult with the legacy payment infrastructure to extend that to non-bank players, all right? Now, with this solution, you are seeing opportunities to then redefine the access mechanisms, open it up to non-banks like fintechs, like big techs, like telcos to drive financial inclusion. And I think that is where the real McCoy is. So, what we do as MTech is, just sitting as part of this collaborative ecosystem, sitting in that middle, in the middle of the two sides of the platform, the non-bank and the banks, the non-banks, the banks and the central banks, innovation coming in from central bank to the marketplace. So we talk about two-way innovation. So it's not only regulators regulating innovation, but now CBDCs enable, central bank to bring a real innovation around payment into the market. How do you enable that to work, right? I think we talked about sandboxing earlier, but that's a real concept. But having that CBDC infrastructure that is highly flexible and customizable to meet different, policy objectives, tweaking certain design considerations. But more importantly, having an open CBDC that can leverage on APIs, right, to enable different use cases. So we talk about financial inclusion. And I wanted to talk about this in the context of what exists today. Now, when people think about CBDCs and think about financial inclusion and the possibilities along those lines, the questions you get is, what will it do that mobile money is not doing, for example, in Africa? We're seeing mobile money proliferate, right? And the growth is enormous when you think about what is happening over the last few years. Now, the question then is it going to, replace mobile money? Can it do that? Why is it different? But the point is, in the context of collaboration, I look at CBDC and I say, one, it's CBDC as a mobile money issued by central bank. You think about it that way. But I want to talk a bit more about how CBDC can enable even the telco-led mobile money solutions that you have. And that's something that I think is really interesting to talk about. You have the central bank on one side enabling CBDC telcos to link these solutions to the CBDC. And that creates a whole new set of opportunities, right? So that's really an architectural consideration as much as it is, a consideration around how might we make this work. And, we begin to have conversation at times around disintermediation of banks, all right? And I always think that when you talk about making a change, you start with, the policy objective. When you think about banking and the way the banking infrastructure works today, there is only so much the business case of banks can enable you to scale to the last mile, right? In remote places in Africa, for instance, where the business case to take branches, to take ATMs, and to take all this banking infrastructure there is not just really sensible. So you need alternative new players that can enable that scale. You don't have ATM in remote places, but you have mobile phone services, right? How do you enable that to happen? Leveraging the power of the CBDC, leveraging what's unique to the CBDC that you don't have with commercial bank deposits, for example, which is largely what the mobile money solutions today are, sort of linked to. So how do you do that? And, for me, I look at it and I look at the inherent issues within mobile money today. I just talk about 2 or 3 of those issues and how CBDCs might help sort of alleviate those issues. And you can see CBDCs addressing those issues. You can see financial inclusion thriving, right? So today you have, several banks being able to come into the banking and into the ecosystem without necessarily having a bank account. And that's the power of mobile money. Open accounts based on being able to transact based on, just having a mobile line, an handset and a SIM card. And, CBDC as in itself, I called it earlier, a central bank issued mobile money. But thinking about the existing mobile money, you have a number of issues there. One of that is interoperability, right? Now we are seeing a lot of progress around mobile money interoperability across Africa. You can be in Ghana, for example, and you want to send money from MTN to maybe Vodafone. That's possible, but there's a lot of painful integration there. Not only between the telcos, Vodafone to MTN, but the banks that hold the underlying commercial bank deposit. For this telco is escrowed. And those integrations are multi-party integration, complex, weak in many sense, and it reduces the efficiency around reconciliation, around the interoperability. You can think about CBDC for what they are: central and very fungible. And when you think about that fungibility of CBDCs, it then makes it possible for a telco to be able to integrate with one central party like Central Bank, if that is an open platform. And, because that is the same CBDC that is accepted by MTN, for example, as a means of exchange of value, will be accepted by Vodafone in Ghana, because, if Bank of Ghana says this is a new legal tender, it becomes acceptable to everybody. So you can see how that in itself takes away a number of issues around interoperability when you think about that feature of CBDC that was spoken about. Another part of it that I like to touch on is liquidity management. That's a big thing when you think about mobile money, all right? The way mobile money solutions work in a very cash-based economy like Africa. We're seeing a lot of digitization of money, but there's still a lot of dependency on cash. So with mobile money, you have layered on top of that agent features where you can, as a consumer, go in to do cash in, cash out. Now, to make this possible, you need to manage liquidity. And there are 2 positions you need to manage carefully. Your e-float, which is really money in the bank, cash deposit, commercial bank deposit. Then you need to manage your cash position as an agent. So this is something that if you've ever had the experience of trying to do a cash in or cash out, the experience is not always good, because at times the agent tells you, I don't have enough cash, so you can't do a cash out. Or I don't have enough e-float, like you can't do a cash in, because for you to do a cash in, you need to debit your e-float position and credit the consumer position is giving you cash. Now that is challenging today because of the dependency on the commercial bank. Commercial banks, for the right reasons, need to manage, the liquidity risk that they are availing to these telcos. So you really can't access all your liquidity position because you need to maintain a certain amount of float. What does that do to the mobile money, the mobile money solution?
By the way, excuse me, Tunji, we're going to have to wrap up.
Yeah. So I'll just wrap up on the next few points. So you're seeing solutions there that create that ability for a telco and the agent network to manage their liquidity position themselves. So, and overall cost of the mobile money product then become lowered. You can see that attracting more end users into the product. So the reality of it is that it's a game of collaboration. When you think about these use cases, I like to end with a quote from the CEO and founder of Camel that as much as you need technology, you also need policy to be thoughtful and focused to achieve financial inclusion. And it's a game of collaboration, as I said earlier. These are my contact details. I'll be happy to engage more. Thank you very much, Bob.
Okay, great. Hey, wow, didn't I promise you an awesome panel? Wasn't that's just incredible. So thank you, Tunji. So we have 6 minutes, and so I'll pose one question that I think we may have some time for, and then ask each of the panelists to have 30 seconds to leave the audience with a closing thought. So the question I think would be very interesting to discuss is interoperability. And so there's a lot of talk about need for interoperability, particularly when it comes to cross-currency links. How do we see this thinking on this front evolving? And so let's kind of go in the order that we've gone through for this panel, and start with Jesse.
Sure. I think that interoperability, we need to think about it at 3 levels. We need to think about it within the CBDC, between different private sector intermediaries. We need to think about it within the domestic economy. How does the CBDC interoperate with commercial bank money, e-money, mobile money? How do we make sure that that is interoperating in a way that meets public policy concerns? And then finally, how does it interoperate with other currencies, both commercial bank and CBDC in the broader world? And my personal view on that is that we're not going to be able to design every CBDC from the ground up to seamlessly interoperate with one another. Instead, we're going to need intermediary platforms to provide the connectivity between CBDCs. In the near term, I think that folks like MasterCard are really well positioned to do that via card networks. And in the longer term, we can start to think about building shared services platforms, linking real-time payment systems and the like, and really building something that's new and transformative. So I think that's generally my view on interoperability.
Great. And let's go to Karan. And by the way, Tunji, you can stop showing your screen. Karan, over to you.
Jesse, that's a really good answer. Doesn't leave me much to add. But I would say, I think just 2 more thoughts on that would be, I think it's the principle of going centralized or decentralized, because within CBDCs, you can still take that approach. And I think that will drive your interoperability requirement. So that's definitely one. I think Jesse covered it pretty well. So I don't want to waste everyone's time just repeating him.
Okay, great. Over to you, Josina.
So it's fantastic, because I would say, I'm so sorry, I'm not in mute. I would say the same, just it covered exactly very, very well. The interoperability is the answer for coexistence of traditional payment infrastructures and CBDC. So thank you very much. It was great.
Yeah, what the previous guy said. Tunji, your thoughts on that?
No, I'll just piggyback on what Josina and Karan have said. Jessica covered it really well. But to add one thing to that, is to say, when we think about interoperability, we also want to think about it from a use case perspective, because that then tells us also the variety of ecosystem players that needs to come into play, right? So when you think about interoperability from a local financial inclusion, payment system resilience perspective, of course, national switches, banks, telcos, fintech. But when you begin to think about cross-border payment, for example, interoperability has to go into the dimension of CBDCs to CBDC, something Jesse also mentioned. You're looking at card networks, you're looking at stablecoin platforms, you're looking at a wide variety of payment rails that you can plug into and make payments work for each other. CBDC is going to do well when it's designed to be interoperable.
Okay, great. Thank you. All right, so we have 2 minutes, so it's time for lightning round. So I'm going to go around in the same order again. What is the one message that you'd like to reemphasize or leave with our audience as they go forward about CBDCs and financial inclusion? So Jesse, back over to you.
I think that Tunji provided some of the most insightful content of this whole discussion, because I think the core of what he was saying, if I understood it correctly, was you need to focus on the specific use case. CBDCs aren't some silver bullet for financial inclusion. They have to target specific problems. And I think the work that he's doing in terms of thinking about that is absolutely the type of direction that CBDC research and thinking needs to go in.
Great. Thanks, Jesse. Karan?
I'd say bringing everyone together and actually addressing particular issues and building on top while having the foresight of where this can go to is important. So i.e., I'm just gonna it's not a contradiction to what Jesse just said, but in terms of while you look at use cases, I think it's important to see where the possibilities lie, because otherwise, your architectural blueprints, and that's not just the technology architectural, just, policy architecture as well, could leave things out. One thing that we haven't mentioned here today, and just for thought provoker, is like, what is the role of telecom? And then it came up, but like as a question, what is the role of digital ID and telecom in the CBDC space? So that would be my thought around, that would be my leaving point around bringing the right stakeholders together, addressing and actually acting on some of those use cases with the foresight.
Great, thanks. Josina?
So even though we need to take care with our use cases, and I would like to share more two pillars. Data protection, it's so important, cannot be totalitarian. And another one, the law, always the law. So it's only this.
All right, great, thank you. And Tunji?
Yeah, thank you very much. I think the one thing I would like to say is, I think this is learning from some of the ongoing CBDC work that we're seeing. A really collaborative and consultative approach is key to making success out of CBDC implementation. And you're seeing a number of regulators take that sort of approach, engaging the ecosystem. If we take, we're going to build this for the ecosystem anyway. It's not an enterprise tool for the central bank enterprise. It's for the ecosystem, and it could have far-reaching impact, even cross-border. So you need to have engagement across the market, particularly once that clarity.
Okay, so we are at our time. So thank you very much. Thanks again to our incredible panelists. Thank you to RegTech Africa. I'm Bob Trojan. Connect with me on LinkedIn, and be delighted to speak with all of you online. And thank you again. We'll wish you a good day.